Hi everyone, I'm Sabine van der Linden. I run Venture Labs under the name of Alchemy Crew. And today I'm very thrilled to be in the InsurTech Business Series podcast.
Welcome to the InsurTech Business Series podcast. I am Fulumi.
And I am Gamola. And together, we host the most exciting podcast on insurance and InsurTech related topics in Africa. Stay tuned. Welcome, Sabine.
Hi, Damala. Thank you very much for having me on your podcast today.
Awesome. It's a pleasure for us to have you. So we usually start off conversations with getting to know our guests. Can you tell us about yourself? Who is Sabine? What has your journey been into insurance and then the space of insurance innovation?
Sure. I'm French and I've actually moved to the United Kingdom many years back, at least 30 years ago, through this program when Erasmus was still something that a lot of European students could do to access knowledge, improve their opportunities as well across European market. And actually the program selected very few candidates to go into targeted countries. So I started actually as a French student moving into the UK. And the interesting thing is I was doing studies to go into banking and financial services. And I would say the journey is, you go and interview with different organizations and you actually test the culture. And I don't know, at the time I didn't really like the banking culture. And at the same time, I think Lloyd's of London was doing a lot of effort to welcome students in insurance, right? Lloyd's of London being a transactional market where specialty line insurance are being traded. Think about satellites, think about celebrities, right? Insuring their voices, or footballers insuring their fit. It's a market where you can actually insure things you cannot insure often through other means. And so my foray into insurance has been through really wanting to work in an environment which had a much more accepting culture of differences, because I guess when I moved to the UK and I studied after 3 years, my English was good, but it was not perfect. And so I wanted to make sure that I gave myself the opportunity to leverage my strength, right? As a French mathematician, a very logical person, and at the same time, my bilingual status, which I was gradually acquiring. I joined a broker of Lloyd's at the time, and my graduate trainee scheme was to work alongside executives and a senior manager to position within the Lloyd's market really interesting piece of art. So I was doing fine art at the time and celebrity insurance actually. And the interesting thing within that broker, you could move around and learn to the process of underwriting risk through really understanding the customer needs, I guess. Not only through what I would call smaller risk type to larger ones. And, I had to move into property and big buildings at some point. But, this overall background just shows that when I joined, and it was, I guess, a very welcoming industry, and they were looking at talent, which I think it's a problem which is affecting the industry again today, after COVID, with a lot of remote working and having to adapt to the new normal. I think the industry is learning to welcome new ways of welcoming talent, by young talent, which are looking for more flexibility in their learning approach. I stayed at Lloyd's of London for 3 years. I went to do my MBA, and then I worked for tech companies, a number of tech companies, for 18 years. And 18 years, I decided to go back to working for smaller businesses, and I got the opportunity to work in fintech to start with. Then identified an opportunity in InsurTech in 2015. And I guess that's where I get my little nickname, in the fact that I accelerated. I guess so far, I mean, my profile, I say 100 to just remain a little bit shy, but probably today, probably 150 startups accelerated, probably help them raise over 120 million, 150 million in funding. And I'm very picky now because fundraising takes a lot of time and effort, and I ran a business at the same time. So after going from fintech into InsurTech and becoming managing director for a startup of InsurTech in Europe and building Hartford InsurTech Hub, the accelerator part of it in Hartford, Connecticut in the United States, I decided just before COVID actually to build my own company called Alchemy Crew, where I'm elevating some of the techniques which are used within the acceleration environment. So I build venture labs for big companies, fewer companies, and my goal is to help them embed within their own environment some of the great techniques which are used by investors. And I think partly, the strategic thinking of big consultancy, but making it much more approachable from an investor M&A language to industrialize the technique of collaborating with startups.
Fast forward 2015 to COVID and all that happened. Many people, we've spoken with, have this sentiment that, we didn't have to wait for COVID for a lot of things that we are seeing within this space, right? If you're going to make a case, about the pandemic and, insurance innovation and how we are seeing a lot of movement within that space today, what would your argument be for or against?
When COVID arrived, and I remember making my own shift from February 2020 and building a company in June 2020 with colleagues in the industry, wanted to collaborate with others to actually build something unique. Industry, the sector itself, realized it didn't serve its customer well enough, I think. And when we entered COVID, digitization became a crucial part of success. So those who already had the processes and the techniques in place were able to enable their employees to work from home and to be effective at serving their customers, whether it was claims, when you look at a professional environment of an insurance company, sorting out claims, answering questions, servicing their customers. Whether it's actually insurance or banking, I had to leave the bank I was with because they became absolutely useless. There was no way to actually have a conversation and be able to undertake any financial services activity when COVID arose. Actually, the neobank and some of the new banks were actually there for their customers. You could call them, you can engage them with them. You could actually get things sorted within 24 hours. And it's where you realize that being digitally prepared is not a nice to have. It's a requirement. So when you look at what has that's done for insurance, I think some companies and some insurers realize they were, COVID ready. Some realized they were actually not, and they were not able to service their customer at all. And some had to keep the light on. So find a way to keep things stitched to actually not lose all their customers. Some did lose their customers because they were not able to service them. Others were able to fulfill some needs and new needs because they were able to identify new product services they could launch during the period to enable people to feel safe. What has that also done is also the realization of how unprepared and uncovered a lot of people were. Whether you look at small businesses, at least in the UK, Some, never really probably read their policies and didn't really understand the consequences of things. And we had a number of lawsuits as well relating to small business insurance. At the end, I think the outcome is the world, and I'm sure you've read and seen that. We have moved to a new normal where employees now want a hybrid environment. Some want to work from home, some want to work from the office, some want to the flexibility of the two. And a lot of business now have policies of maybe 1 or 2 days work in the office per week, which is a change from, a lot of organizations wanting their people to be in the office 5 days a week. When you look at the customer, you have to become more digitized. Otherwise, you're not going to be able to engage with them. A lot of people do not even want to talk on the phone. So what are the channels you are going to use to fulfill your customer needs and ensure you engage with them the way they want to engage? And lastly, I think it's redesigning of product and services. We are emerging in a world where emerging risk is just starting. I mean, I'm sure you hear a lot on sustainability and climate change.
Yes.
We are going to see a lot of new services, appearing to fulfill the needs, not only a consumer, to be more aware of their carbon credit, but also for large enterprises because they cannot consume the same level of fossil fuel as they used in the past. And so I think we are moving into an hybrid world or ambidextrous world where, you will need to fulfill the need of the existing product and services and then look at the new challenges that needs to be addressed and start building the product and services with the technology aligned to fulfill the needs of the future.
During the pandemic, 2020, 2021, there was a lot of talk about disruption. Some people were saying, "Oh no, there's no such thing as disruption." Brian Faltruk, one of our guests on the podcast as well, he wrote a book and he says the future of insurance is evolution, not disruption. Speaking about the whole idea around InsurTech, what exactly is InsurTech?
For me, InsurTech is tech-enabled companies that are bringing new capabilities to the market, which enable large enterprises or themselves to evolve. And I know, we talk about evolution, to evolve or disrupt actually the marketplace. And for me, that implies not only a company which is using technology to improve processes, it has to use those capabilities to deliver new product and services. And the one which can disrupt will be the one who can actually build new business models. Now, for me, insurance technology, InsurTech, is not just about technology for insurance. And actually, I was talking to an amazing gentleman from Oliver Wyman, Dietmar, an expert in insurance, and he actually switched the word techsurance. And I think I definitely agree with him because it's about technology, emerging technology coming into disrupting our industry. Some will be really akin to insurance. Some actually are going to enter insurance. And I think I'm very good at identifying startups which are good for industry, which didn't start in insurance. So it's about technology enablers or technology thinkers who are able to deliver efficiency improvements, but also go into what we call sustaining innovation and game-changing innovation, where they are able to affect the business model. And how do you affect the business model? Is often by, when you look at banking or fintech, it's about unbundling first the basic of the business model. So you've seen a lot of innovation lending and payment. It's more difficult in insurance, but you see it, right? Startup doing underwriting and claims and trying to do it more efficiently. The value is not around the point solutions. The value is around how those different point solutions come together to either serve customer segment better, emerging segment, and we have them all around the world. The Gen Z is going to be the Gen Alpha soon. We are seeing it from the digital nomads, for instance. And so it's not about looking at this segment as with just doing claims for them, right? It's about delivering full end-to-end experience. Mm-hmm. And lastly, it's about rebundling the capabilities into a business model, which is able to literally do things faster, cheaper, and better. And I'm using those words carefully because it's not about just efficiency, right? But when you rebundle, for sure, you are achieving cost saving and cost efficiencies, which has been achieved by a lot of businesses in Asia. The reason why the business model of Zonghang and Ping An is working very well is because they have unbundled and rebundled to a point where using AI or cloud or basic blockchain allows them to take the friction out of the conversation, I would say, or the engagement. And therefore, they are able to provide a product for $7 to the consumer, which is not difficult in Europe. But that is where you unbundle and rebundle and therefore are able to deliver services. Now, that means it's not about insurance technology startups, it's about technology startups serving the industry as best. And that means we talk to legal tech startups, AI startups, cybersecurity, a lot of startups which are not called insurance technology startups. So it's about redefining, I think, what insurance technology is, but the baseline is efficiency for sure. To start with, is where we started in 2015. Then we move into how product and services is serving new customer segment better. And lastly, how do we redefine the whole thing, which is called insurance, which is 438 years old, right? So probably time for invention.
Yes. And I think, you are pioneering that because you started in the Lloyds where all of this pioneer work around insurance started. So I think that you have the right sword to bring down this dragon. Very interesting things you mentioned there, innovation and from all of your engagements with startups, with corporates, with incumbents, this thing, innovation, right? What are some mistakes or wrongs that you have seen?
Well, when you look at the emerging market, it's about finding what investor will call a unit economic cost, which is acceptable. Unfortunately, the business model insurance requires capital to actually run. So, a big mistake which happened during the InsurTech era is, confusing premium and revenue. And, as people who come from insurance, we use the term GWP and revenue because we know what that means. And then now we are actually trying to be really careful around the terminology we are using because GWP is not revenue. For sure, it's top line. But then you have allocation. And so therefore, you cannot assume it as revenue because you have to make sure you have reserve in place to pay for future claims. So when I look at the opportunity for new markets, it's massive. Most country has a penetration of insurance of 3%, 5% maybe for the homeless one, but it's very low. And so I think part of it is about the lack of education, understanding as to the power of insurance to protect people. And in Africa we have this example we love talking about, which is the example, because we really understand this business people can pay through their Vodafone or Vodacom bills for their insurance and through QR codes and be protecting their farms in case of droughts or too much water. Then you can actually see the power of insurance to protect people and making sure that they are not left out of pocket when you actually pay the bills for their family. But I think it's partly, a lot of things come through a proper education. With COVID, what has happened is all the time I'm on 10 hours a day, right? And I need to make sure my business is protected against cybersecurity because by being a digital business, digital teams which are working remotely, you need to make sure that any risk to your business is protected with the right tools, services, and insurance. And because I'm insurance, yes, and I guess I buy a lot of insurance as well. But the key thing here is really understanding the power of the service and really understanding what the business model and the business is doing so that it's protected in the right way, not overprotected based on the revenue generate or lower protected. So it's where the insurer needs to become a friend. And I don't think in many cases the insurer is a friend of the customer always because the system are not ready. I've had with amazing conversations with top insurers at Lloyd's around. So, when are you going to do the real-time review of my top line so that you can actually insure me real time based on, what I make every month from a revenue viewpoint. And this is not difficult, actually. For me, it's not difficult. But what that means is a challenge in the way revenue is being collected or captured, because that means the premium is going to go up and down on a monthly basis, which is not the way insurance company works today. So I think there is a vast opportunity. I think insurtechs or insurance technology companies, we have only scratched the surface. 1% of things can be done has been done. Because if you look at what insurtech is, there's 6,000 startups. Since it started in 2015, they've raised 59 billion of investment funding. And I like talking in terms of investment funding because business can only grow through financial investment.
Yeah.
Think about banking. Banking has already raised 650 billion. So insurtech represent 9% of that amount. And even wealth tech is much higher than insurtech. And wealth tech started much later than insurtech.
Yeah. We refer to the M-Pesa story over and over again because that really just shows how well we can leverage technology to get more people to use financial services. It's on those lines that we're even looking at how can we take advantage of embedded insurance. I follow Simon Torrance. How can we rejig insurance to, suit our reality as Africans, right? Different markets, yes, within Africa, but, how can we do this right? You see startups like, Curacell, Pineapple, Naked, who are doing amazing stuff. Lamy, MTech, who are doing interesting stuff across, in different markets, bringing micro products, different products to the market so that they can address the gaps that are there with insurers before now who have not been able to serve all of the markets. We talk about penetration. We're struggling at 3%. The issue has always been around scaling insurance, right? And so with the entrance of insurtechs within the space, how do we scale, some of these offerings, these solutions across markets, even within a specific market to more people? And so that's where, people like you come in terms of investment and investors. Perhaps this is a good time to tell us about what you do at Alchemy.
Before I answer that question, a lot of startups coming to market because they want to solve problems. And often I see, new ventures coming to market amongst, founders who are friends and connections and saying, I didn't like the way I was treated here. I think there is an opportunity to build a startup. I think the challenge we are facing with the industry is, how many claim solutions do you need in the market? Once upon a time, you only had quite a few, right? Just a few, even core systems, right? I remember, 15 years ago, I could list 100, core system vendors. So I think we need just to be really careful for everybody to build a startup, which end up being a dead pool because there is no need for the solution being put to market. Now, when you look at this question for Africa and Africa funding, when I look at some of the numbers, I see, potentially 200, 250 insurtechs over there, fundraise over the years. I guess maybe raise, I think probably reach around $500 million overall of funding. Probably this year would be a really good year for insurtech in Africa. However, again, you cannot have everybody trying to become Elon Musk or Zuckerbergs. And the solutions need to solve a problem. And one thing I often say to venture, why are you doing what you are doing? And have you looked at the competition? Would it be not better for you to go and work for or impress one of the solutions which are already out there rather than trying to reinvent the wheel? Because I think the market we're in is overflown with point solutions and if your target is the insurer, it's unlikely insurers will go for mini point solution because they also have to go through rationalization. And with sustainability becoming more and more important for corporates, they have to be smart around the solution they are using, they will be looking for green solution, using green data centers and all those things. So I just wanted to start with that. Now, when you look at what I'm trying to do at Galchemy. So I set up Galchemy nearly 3 years ago. Gosh, time's going very fast. Well, during the pandemic, launched in June 2020. And the time I launched this initiative with two co-founders. And the goal was to look at how we can extend our competencies. And mine is working with startups. Another co-founder's expertise was in working with corporates and developing frameworks. And my last co-founder was himself an investor located in Paris. And when you start looking at the one-stop shop, right, you actually need to go upstream around, what the problem you need to solve for. And then you need to decide how you solve for it. Either you do it yourself or you do it with a startup. And then lastly, you need the money to fund it. And there's a reason why I wanted this, collaboration to take place. Now, the proposition has evolved in a sense that a lot of the corporates I work with, so my business model is threefold. I work with startups, I work with corporates, and I work with investors. And the big pillar of everything I do is corporate. So I work with leading insurer in at least three continents, Asia, Europe, and United States. And I move to very bespoke work where I either help them from R&D viewpoint, where I enable them to get solution for problems they have to be solved. And I don't do it with, I would say, lipstick on the pigs. I just justify everything like an investor would do with data from the insurance or insurtech world. So everything is validated with from an investor lens or an M&A lens viewpoint. But also what happened as part of this is some of the insurers approached me and said, can you help me build my own framework? So I also do white label framework build where I help insurers build their own labs. So I do venture labs and I help insurers build their own venture labs to enable them to commercialize solution with startups. So when you look at the word around scaling and ROI, the key thing is it's all about the way you go about doing it. And my outcome is always how maximize the relationship between the corporate and the startup. Partly will be through partnership collaboration. Partnership being converting a contract into a relationship where both is going to achieve value, financial returns value from the relationship. And a lot of the work we do has to lead to top line growth. It's faster to deal to top line rather than just focusing on efficiency savings. And through that, then it becomes easier to raise funding, because if you have a great startups which is in demand with great corporates, then bringing this to investor become easier. So that is what I do every day. Now, the market has evolved. So we're always looking for new things to do. And as you know, because I'm an influencer, I do also work with a number of brands, which are not insurers, actually. A lot of big tech brands work with me around approaching, organizing event and being more present within the fintech and insurtech world. And lastly, working with my co-founder in Paris, I've been looking at how we make big corporate find ways to build their own fund in an easier way. Min is focusing on VC as a service, different brand, but we know that it's an area which is very important for corporate to be able to access and provide financing to start up and doing it in the right way. So VC as a service is also another big part of what we do. And that is it's more through my co-founder brand, Mintran, through Mandala Partners.
Interesting that you mentioned, VC as a service, something I also was going to ask you about. I understand the idea, right? And I have always thought that for insurers, there needs to be a lot more involvement with digital partners, startups that is partner with on this journey, right? Right now, a lot of focus is on, well, let's partner to sell insurance. Partner with us. We'll put our products on your platform. We have the APIs, at least for those who have it, right? We can sell through you to your 10 million customers, and things like that. So yes, helping them to be more active in terms of investing in the innovation that is being developed, by these startups. I think it's an interesting one. But perhaps maybe if you can talk a bit more about that idea around VC as a service. When you were speaking earlier, I coined out something, IAAF, insurance as a friend. Beyond just sell for us, right? How else can incumbent help to build or grow this insurtech space? Because it's the future. COVID has come and there's a new reality, just like you mentioned earlier.
Well, the key thing is looking at stuff just to solve macro problems, I think, is short-term, will result in short-term outcomes. Because if you have to report to board and executive level, if you are looking at startup as point solution to serve your underwriting or solve your claims issue, well, they are going to solve the problems, but it's short term. So you have to look at the problem as a portfolio issue and also as infrastructure, I would say infrastructure. So it's about, often we talk about unbundling the problems. So what is the business model doing and where is the wrongs are? And then rebundling with the capabilities which can actually yield interesting outcomes, which hopefully will be top line growth. And when you look at the corporate, looking at partnership only, I think it's quite short-term. So you need to actually look at what we call transferability strategies, which would include not only partnering with startups, but also investing in them and potentially acquiring them. To be able to do that, you need to actually look at what you are doing in terms of what we call corporate venture. Which is a theme, which is an industry, a sector that many organizations do not understand yet. And it's why, as you know, I also have my own podcast, which is focusing on corporate venturing only. So now when you look at the theme around VC as a service, and I realize a lot of people don't know what that means because, when I share means article, I worked on a few weeks ago and we published on the Alchemy website. When we actually share it onto LinkedIn, I get comments where people say, oh, this is old world. We've seen that in finance, all the things. Yes, probably, VC as a service is not completely new, but it's all about the business model. What you find is investors and finance, the way they've implemented that often is a framework around remuneration. And, for people who are going to listen to the podcast, understanding how investment works around general partners, limited partners, and carry and remuneration, you have the old world environment, and then you can actually create as a service, therefore a much more flexible remuneration approach where you don't have to invest the first 100 million. And I'm going to give big numbers because this is usually the way funds work. So they actually have to put 50 million, 100 million up front to build a fund where you can actually use a much more flexible approach, which is far more linked to investment strategy. And so if you can do that, and therefore when you look at Africa, for instance, it's probably an approach would probably fit well because people don't have 50 million sitting in the bank account, but actually can make decisions very quickly on top leading tech companies they want to be part of the health of, or the growth of. Then you can actually look at different business models around how to do VC. Now, Mean comes from a very well-known VC background. He worked for a company like Nokia. He worked for the like of AXA Strategic Ventures many years back. So, he has 30 years as being a VC, and the VC world is not static. It evolves all the time. And, for the past 2 years, looking at, what people want, what people don't want, and partly in our world, which is corporates, which are insurance companies, he had to adapt the model to make it much more approachable for smaller insurers to be part of the new world economy and become themselves limited partners into a funding structure which allows them to achieve value. But that also means that you have to have an eye for winning startups. You have to have a framework to identify winning startups, right? Financial modeling and techniques to actually understand what growth could look like and how you project growth, even in identifying founders' profile, because you cannot have a successful company without a good team. And then it's about also regular interaction with your limited partners. And so this come into a bit of a package and enabling those who do not know how to invest, right? It's also about providing the method. So helping the limited partners to understand how it works. Because I think in a VC world, you can give your money to VC and the VC will definitely look for the best opportunity to actually give you a return on investment. But you have no ability to have a voice into the choices which are made. And I've seen situations where companies would invest in competing companies through this process. By having a very clear lens on site with your VC or your general partners, who literally is your personalized, like concierge VC, then you have more ability to design the investment thesis, be clear around metrics, and also have transparency around avoiding conflict within the portfolio. So yes, that is it in short, but there's so much more.
Yes. I agree with you. And I guess that's where Alchemy comes in, being able to help insurers. Because just like you explained now, there's a lot of work that goes into, I'm going to invest in this company. Being able to have a partner like Alchemy to do those things, but working with the insurer, for example, to say, these are the areas that I'm looking at. This is what I want to do. These are the KPIs. These are things that I want to achieve. And then you and the team can do the work to help the insurer, get to that point.
Exactly. And it has to be a really structured process. I mean, a lot of our initiatives, are 8 to 12 weeks. So we have to move very fast.
And 8 to 12 weeks.
Yeah, it has to be 8 to 12 weeks. So we have to take away the politics out of the process. And so the reason why a lot of insurers come to us, they have to solve a problem, they have to move fast. And our initiative based on the problem would be between 8 to 12 weeks. And that is the demand-led approach. Now, if it is a commercial lab, the best commercial lab I've built, a lot of people probably seen through social media, and I'm very proud to work with this amazing insurer. But you will have to look at my social media to find out which one it is. It's a 12 months initiative, and I love what we are doing. And I know this company is going to be the number one in what they do around commercialization with ventures. So that is 1 year. But, you have everything in between. When you look at VC as a service, when you want to build it has to start with what we call a charter. So why we are doing what we are doing, that can take a month. And then it's about identifying the investment thesis, why we're doing what we are doing. I think Min would say this is probably 3 months. 2 to 3 months, but then, you can actually launch a VC arm in 6 months maximum and start investing. He's working with some of the leading European insurers doing this at the minute. And, his goal is to return money to each of those organizations. And I know he's been doing very well, even during COVID, because at the end of the day, digitalization has enabled a lot of insurers realizing that there is money to be made in ventures who actually thought about it a long time ago.
Yeah, absolutely. And I know that a lot of your activities are outside of Africa, but is Africa a space that interests you that much to say, hey, you want to work with insurtechs and insurers within this space?
I have worked with, as you may know, a lot of the startups that came into our programming in Europe and in the United States. So Pineapple is one of the startups which came into Hartford InsurTech Hub. I've worked with startups like Aerobotique, which is from South Africa. There are other names of African startups which have come through our European programs, even participated to a Code Innovation Challenge. All this, when I find talents, and we're trying to give them some exposure. So yes, I do work with African startups. And the key thing is, it's about differentiation, right? How can we find something which is so unique and can be differentiated and actually beat the competition, the European competition? Don't forget that in the UK, 14% of the global insurtech startups come from the UK, 5% from Germany, 5% from France, and probably 45% from the United States. So there is a lot of competition for skill and differentiation. I would say for differentiation. And so if we can find individuals which are really unique, sure, we will want to talk about them and bring them into the fold. I think the opportunity is we are moving into a world of, moving from fossil fuels to renewable energy. And then we also need to use mobile phones and better and learning from, using, I guess, feature phones, right? Yeah. And so the opportunity, I think, for Europe is being more mindful. And I know for a company like Allianz and Munich Re and Swiss Re have done a lot of work in Africa to actually learn from a market which has to consume data and asset in a much more nimbler way. Yeah. I'm sure there are many more insurers who are looking forward to doing this.
Absolutely. I agree with you in terms of, what the opportunities are, right? I don't know if you know Richard Lefley, microinsurance company, started off at Microinsure here in Africa, in Kenya, Ghana, Nigeria. Now they're a global company, but starting off walking around insurance and seeing how to get people who are excluded to buy insurance, buy through feature phones. You gave the example around the M-Pesa. People are able to engage with financial services because they need it so that, they don't fall back into poverty. Innovation like that as to how we can create more opportunities. And we see that even micro insurance company today, they have a Lloyd's syndicate, which is quite interesting, right? Bringing micro insurance to a global scale to see how we can get more beyond. Because one of the things that I also seen is when you're talking about emerging markets, people usually will gravitate to Africa, Kenya, Nigeria. But when you talk about emerging markets, we spoke with Nabi from Australia. She's serving gig workers, for example, right? That's an emerging space. Digital nomads, like you mentioned, that's an emerging space. That's new risk for them. How do we create solutions? And that's where technology innovation comes in, right? And the people who are pioneering these startups, many of them at idea stage, pre-seed stage, and they need the money. The money is the fuel, to get some of these things, even to test them and see how to iterate. Speaking to these guys, what would be your advice in terms of the key things that they need to put in place now that would help the company in the future, and then also help them to attract the funding that they actually need?
Yeah, it's a good question. And, when I look at my databases, we have one startup, which is called Affinity Health, it was built in 2004, which is in Joburg. And then when you look at the average fundraise in the country, you see, which probably have gone between raising 60 to 40 million. And then quickly we go down to, 15 million like Naked, or to Raco, which is around 7 million, and then Pineapple, which is around 6 million. So my recommendation, one thing I would say is if you can give me another 6 months, I would probably put courses as to how do you become successful. Wow. And the reason why I need to do this is because I get out by so many startups who want to help me to raise funding, and I cannot help a startup raise 5 million because the time required to raise 5 million is too long. I can only focus on companies which are raising 20 to 30 million because then it makes my time worthwhile. And so the key thing is first, is understanding the business model. So I would say to any of your listening to the podcast is go on Google and look at the business model canvas and then try to work out whether you have a differentiated business model. Then from the business model, work out your value proposition. Is there a value proposition that one, customer want to buy? So that is what we call desirability. Second, is the product something the customer want, which we call feasibility. And third is viability. Are the financing making sense? When you have this, right, business model, value proposition, then from your value proposition, working out your what we call the right side of the business, the value proposition, which is users, the left side of the value proposition, which is feasibility angles, the product, and then lastly the bottom part, which is the financials. If all this fall and make sense, usually investors we are actually going to listen to you, but they are only going to listen to founders who are teams. So investors invest in teams. They are not investing in people. So make sure you have a CEO, a CFO, a COO, a CTO, whatever the right, or CMO, whatever the combination is right for the specific proposition. Some propositions are very much creator-led, so they need marketing execs. Some propositions are very technology-led, so they need a very strong technology officer, or product-led, so they need a chief product officer. So all those titles are not random, right? You don't put random title to people. It has to be aligned to the strategy and where the business is going. And I would say it's all about communication at the end. So how is your pitch or your story? Let's just use better word. What is the story, and how the story cements together so that an investor can actually quickly understand the opportunity and where there is money to be made. Most investors are financial investors, so they need to deliver a return on investment for their limited partners, LPs. And so they are going to look at unit economics.
Thank you. In terms of innovators coming to this space, talking about InsurTech generally, looking also at the trends that you are seeing and from all of the engagements that you are seeing as well, there are a lot of areas within the insurance value chain where there's need for innovation. Where do you think the opportunity lies right now?
So we always need to be careful, right, around the value chain, because, there is innovation to be for sure made around the value chains. Think about, claims. You have great company such as Snapsheet, which has done very well, or Tractable, right, which reach unicorn status. And then when you start looking at areas such as fraud detection combined with claims, you have Shift Technology. Then when you look at the underwriting space, it's all about data and underwriting and pulling data together through very sophisticated algorithm and AI and machine learning algorithm. I would say, I wonder every so often, is there saturation here? Because there are so many. And even though, we still keep the conversation going. And so right now, you may know there's this major conference in the United States. The theme I will be actually talking about would be sustainability. But I'm not just going to look at sustainability. I'm going to look at supply chain sustainability and climate change sustainability and urbanization sustainability, which means that the underwriting algorithm needs to be responsible and the data needs to be ethical. So I think the opportunity is to look at the next layer of how data is being used and whether it's compliant with regulatory requirements and able to make sure that they are not eliminating part of the population because of the way they are being built. And then responsible is actually driving that transparency in underwriting. And I'm sure you've heard around black box underwriting and white box underwriting. And one of the great startups which talk about white box underwriting is Accurate, because at the end of the day, you need to actually be able to show to the underwriter and the regulator how algorithms are being played to provide recommendation around profiling and risk pricing. I think, though, the opportunity needs to be bigger than that. So we're still focusing on today's problems. I think the opportunity needs to combine all this stuff to look at how we start building a really interesting business model. I don't think there's mini circular economy InsurTech business model, for instance. And a lot of innovation which is coming in is around parametrics. Great startup, absolutely love. It's called Parametrics with an X, which is around cloud outage, but that is a really smart business model. Actually, this is such a smart business model. I was like, why I didn't come up with this one. Exactly, right. You're laughing. So I feel very privileged, to work with all the startups because I said, oh God, this is so smart.
Yeah.
But that is it, right? How can we find really smart business models which are really solving, not today, right? But which are going to be there for very long term. And you know what? Cloud is not going to go. I mean, I remember, when Google stopped for half a day, I went to go and drink coffee because I could not access my emails for 4 hours. So things like that will happen. I think it's looking at the problems of tomorrow with all this tech we are using. This is the opportunity.
We can go on. It's been an interesting conversation, and it's been a pleasure speaking with you. I have reservations around ESG and sustainability, but I guess that could be another conversation for another podcast.
Indeed, right?
Lastly, for those who want to connect with you, collaborate, or work with you some way or another, how can they reach out?
Well, to channel LinkedIn. I'm very active on LinkedIn. So messaging me on LinkedIn, I think that's the way you reach out, actually.
Yes.
So you see, I reply. And also just go onto the website, hello@alchemycrew.com. I have a team looking at email, because we are on planes back now and we are traveling. So we are not always able to answer all the emails, but I have a team definitely dedicated in doing that.
Awesome. It's been a real pleasure.
Same here. Thank you for having me with you.
Hi, and I hope you did enjoy that conversation. Quite interesting one. Do ensure that you continue to listen to our podcast and share as well with your colleagues and friends future episodes and even previous ones on Apple, Spotify, Google Podcasts, on every platform that you get your podcasts.
Right, and also don't forget to join the conversation on all of our social media platforms. We might have comments, reviews, as well as questions. Please do share on our LinkedIn page, on our Twitter page, as well as remember to follow us.